One Good Trade by Mike Bellafiore. Book summary in English. All right, PowerBooks fam, what is going on? Welcome back to PowerBooks, your go-to channel for powerful book summaries on everything from self-development and business success to the crucial mindset of trading and investing. We're here to break down the most impactful books on wealth building, mindset mastery, and personal growth, delivering life-changing lessons you can absorb in minutes. Have you ever stared at a trading chart knowing the setup was there, but your finger just wouldn't click? Or maybe you've ridden a massive winner, only to give it all back on the very next trade. Ever wondered what separates the consistently profitable traders from the rest of the pack? Well, buckle up, because today we're diving deep into the trenches of professional trading with a book that pulls back the curtain on what it really takes to succeed in this high-stakes game. We're cracking open Mike Bellafiore's One Good Trade inside the highly competitive world of proprietary trading. This isn't just about finding the perfect strategy. It's about understanding the mindset, the discipline, and the relentless pursuit of execution that defines the best in the business. Whether you're aiming for financial freedom, mastering your mindset, or developing that disciplined trader's edge, this book has powerful lessons for you. So if you're ready to level up your trading psychology and gain an insider's perspective on how the pros consistently make their one good trade count, then you're in the right place. Let's get started. What are your biggest psychological hurdles when you're trading? Drop your thoughts in the comments below. I'm curious to hear. And don't forget to hit that like button and subscribe for more powerful book breakdowns to fuel your journey to success. Part 1. Inside a Prop Trading Firm. Chapter 1. These Guys Are Good. This opening chapter serves as an immersive introduction to the high-octane world of SMB Capital, the proprietary trading firm where Mike Bellafiore provides a first-hand account of professional trading. Instead of immediately diving into strategies, Bellafiore masterfully sets the scene by showcasing the individuals who thrive in this demanding environment. He paints a vivid picture of the trading floor, the intense focus, the rapid-fire decision-making, the constant hum of activity, and the palpable energy of traders locked in battle with the market. Bellafiore introduces several key traders within the firm, each with their own unique style, personality, and area of expertise. Through anecdotes and brief profiles, he illustrates that there isn't a single mold for a successful trader. Some might be meticulous chart readers, others might excel at capitalizing on news catalysts, while others possess an uncanny ability to read order flow. What unites them, however, is a shared dedication to their craft, an unwavering commitment to improvement, and a relentless pursuit of profitability. The chapter emphasizes that the success of these good guys isn't attributed to luck or innate talent alone. Instead, Bellafiore subtly highlights the rigorous training, the constant self-assessment, the collaborative learning environment, and the firm's high standards that contribute to their consistent performance. He underscores the idea that professional trading is a skill that is honed through dedication, discipline, and a willingness to learn from both successes and failures. By providing these early glimpses into the lives and approaches of successful traders, Bellafiore aims to inspire aspiring traders and set the benchmark for what it truly means to be a professional in this competitive field. Key takeaways for traders. 1. The reality of a high-performance trading environment. Gain a visceral understanding of the intense focus, rapid decision-making, and competitive yet collaborative atmosphere within a successful prop trading firm like SMB Capital. This provides a realistic picture of the professional trading world. 2. Diversity in trading styles and personalities. Recognize that there isn't one right way to trade. Successful traders come from diverse backgrounds and employ various strategies tailored to their strengths and market preferences. Bellafiore's introduction of different traders illustrates this crucial point. 3. Success is earned through skill and dedication. Understand that consistent profitability in professional trading is the result of hard work, rigorous training, and a relentless pursuit of improvement, not just luck or inherent talent. This takeaway aims to demystify the profession and emphasize the importance of effort. 4. the power of mentorship and a collaborative culture. Appreciate the role of experienced traders in guiding and coaching newer ones within a firm like SMB. The chapter subtly highlights the importance of a supportive and challenging environment for growth. 5. High standards and continuous improvement are non-negotiable. Recognize the unwavering commitment to excellence and the constant drive for self-assessment and development that characterizes successful professional traders. This sets a high bar for aspiring traders. 6. Learning from real-world examples. Connect with the brief yet impactful stories and characteristics of the traders introduced. These real-world examples make the concepts more relatable and provide tangible models for aspiring professionals. 7. Professional trading as a craft. Begin to view trading as a skill that requires continuous honing and mastery, much like any other profession. This shifts the perspective from gambling to a serious endeavor. 8. The importance of the human element. Understand that despite the technological advancements in trading, the human element, discipline, focus, adaptability, remains paramount for success. Chapter 2. One Good Trade. This pivotal chapter introduces the core philosophy that underpins the success of SMB Capital, and according to Bellafiore, the key to consistent profitability for any trader. The concept of focusing relentlessly on making one good trade at a time. Bellafiore argues that many aspiring traders get caught up in the allure of quick riches, constantly chasing big wins and fixating on the monetary outcome of each individual trade. This, he contends, leads to emotional decision-making, deviation from trading plans, and ultimately, inconsistent results. Instead, Bellafiore advocates for a paradigm shift in focus. He emphasizes that consistent profitability is not about hitting home runs every time, but rather about mastering the process of identifying and executing well-defined trading setups with discipline and meticulous risk management. He breaks down the essential components of what constitutes a good trade, highlighting the importance of thorough pre-market preparation, a clearly defined trading plan with specific entry and exit criteria, a sound understanding of the risk-reward profile, and unwavering adherence to those rules during execution. The chapter stresses that by concentrating all your mental energy and focus on the process of making a good trade, the preparation, the execution, and the risk management, the positive outcomes will naturally follow over the long run. It's a subtle, yet profound shift in perspective, moving away from the emotional roller coaster of chasing profits on every tick to the more controlled and strategic approach of mastering the individual trade. Bellafiore illustrates this concept with anecdotes from his own trading and the experiences of other successful traders at SMB, emphasizing that a consistent focus on one good trade builds a foundation for sustainable success. Key takeaways. 1. Shift focus from outcome to process. Understand the critical difference between fixating on profits and concentrating on the quality of your trade execution. Bellafiore argues that mastering the process is the key to achieving consistent results over time. 2. Defining your personal good trade. Recognize that a good trade isn't universally defined. It's about identifying the specific setups that align with your trading strategy, your edge, and your risk tolerance. This requires deep self-awareness and a well-defined trading plan. 3. The foundational importance of preparation. Appreciate the crucial role of thorough pre-market analysis, including understanding potential catalysts, identifying key levels, and formulating a clear trading plan before the market opens. Good trades are often born from diligent preparation. 4. Clarity in entry and exit criteria. Understand the necessity of having precise and unambiguous rules for entering and exiting trades. This eliminates ambiguity and reduces the likelihood of emotional decision-making during live trading. 5. Sound risk management as an integral part of a good trade. Recognize that managing risk effectively, knowing your position size, setting appropriate stop losses, is not an afterthought but an essential component of every good trade. Protecting your capital allows you to stay in the game. 6. Discipline and execution is paramount. Understand that even the best planned trade can fail if not executed with unwavering discipline. Sticking to your rules, even when emotions run high, is a hallmark of a successful trader. 7. The power of compounding. Small, consistent wins. Appreciate that focusing on making one good trade at a time, consistently, builds a foundation for long-term profitability through the power of compounding. It's a marathon, not a sprint. 8. Detaching emotion from individual trade results. Learn to view each trade as a single data point in a larger series. Avoid letting the outcome of any one trade overly influence your emotions or future decisions. Focus instead on the quality of your execution. Chapter 3. A Good Fit. In this chapter, Mike Bellafiore shifts the focus from the mechanics of a single trade to the characteristics of the individuals who are likely to thrive in the demanding environment of a proprietary trading firm like SMB Capital. He emphasizes that while trading skills can be learned and honed, certain inherent personality traits, work ethics, and learning styles significantly increase the probability of success. Bellafiore provides insights into the firm's rigorous recruitment process, highlighting what they look for in aspiring traders beyond just a basic understanding of the markets. He underscores the importance of a genuine passion for trading, a relentless drive to improve, and an exceptional work ethic. The ability to handle the intense pressure, accept constructive criticism without ego, and maintain a positive attitude in the face of inevitable losses are also highlighted as crucial attributes. Furthermore, Bellafiore touches upon the significance of coachability, the willingness to learn from experienced traders and implement their guidance. He emphasizes that a good fit isn't just about individual talent, but also about the ability to integrate into the firm's culture and contribute to a collaborative learning environment. The chapter serves as a candid look at the qualities that SMB Capital values in its traders, offering valuable lessons for anyone considering a career in professional trading or even seeking to improve their individual trading performance. It suggests that self-awareness regarding these traits is the first step towards determining if this path is truly the right one and what areas might need development. Key takeaways. 1. Passion for trading as a foundational requirement. Understand that genuine enthusiasm for the markets and the process of trading is a crucial driver for the sustained effort and dedication required for success. It's more than just wanting to make money. 2. Relentless drive and work ethic. Recognize that professional trading demands significant time, energy, and commitment. A strong work ethic and an unwavering drive to learn and improve are non-negotiable for navigating the challenges and staying ahead. 3. The ability to handle pressure and stress. Appreciate the intense and often volatile nature of the trading environment. The capacity to remain calm, focused, and make rational decisions under pressure is a key differentiator. 4. Openness to constructive criticism and coachability. Understand the importance of being receptive to feedback from experienced traders and being willing to implement their guidance. Ego can be a significant barrier to growth in this field. 5. Resilience and the ability to learn from losses. Recognize that losses are an inherent part of trading. The ability to bounce back from setbacks, analyze mistakes objectively, and adapt your approach is crucial for long-term survival and improvement. 6. Positive attitude and mental toughness. Understand the importance of maintaining a positive mindset even during drawdowns and cultivating the mental fortitude to persevere through challenging periods. 7. Cultural fit and collaboration. Appreciate that in a firm setting, the ability to integrate into the team culture, collaborate with other traders, and contribute to a positive learning environment is highly valued. Even individual traders can benefit from a collaborative mindset. 8. Self-assessment for aspiring traders. Encourage self-reflection on these key traits. Honestly evaluating your own strengths and weaknesses in these areas can help determine if professional trading is a suitable path and highlight areas for personal development. Part 2. Tools of Success. Chapter 4. Pyramid of Success. In this chapter, Mike Bellafiore introduces his pyramid of success, a metaphorical framework that illustrates the hierarchical nature of trader development. He argues that becoming a consistently profitable trader is not about mastering one secret strategy, but rather about building a solid and comprehensive foundation of skills, knowledge, and mindset, layer by layer. The pyramid emphasizes that neglecting the base or trying to jump to advanced techniques without a strong foundation is a recipe for instability and eventual failure. Bellafiore likely outlines several key levels within this pyramid. The base typically consists of fundamental elements like unwavering risk management and a robust trading psychology, including discipline and emotional control. Building upon this foundation are essential trading skills such as understanding market mechanics, developing a profitable trading plan with clear entry and exit rules, and mastering specific trading setups. As traders progress up the pyramid, they incorporate more advanced concepts like reading order flow, understanding market context across multiple time frames, and refining their ability to adapt to changing market conditions. The apex of the pyramid often represents self-mastery, an intuitive understanding of the market and one's own psychological tendencies, leading to consistent peak performance. The chapter underscores that progress through this pyramid is not always linear and requires continuous learning, self-assessment, and a commitment to strengthening each level. Just like a physical pyramid, a weakness at the base can compromise the stability of the entire structure. Therefore, consistent effort and attention to all aspects of trader development are crucial for building a lasting and profitable trading career. Key takeaways. 1. Trader development is a layered process. Understand that becoming a successful trader involves building a comprehensive skill set and mindset progressively, layer by layer, rather than finding a single magic bullet. 2. A strong foundation is paramount. Recognize that robust risk management and a disciplined trading psychology form the essential base of long-term success. Neglecting these fundamentals will undermine even the most promising strategies. 3. Progressive skill acquisition. Appreciate that trading proficiency develops through mastering fundamental concepts before moving on to more advanced techniques. Attempting complex strategies without a solid base is often counterproductive. 4. Continuous learning and refinement at each level. Understand that ongoing education, self-assessment, and a commitment to improving at every stage of the pyramid are crucial for sustained growth in the dynamic market environment. 5. Risk management as the bedrock. Emphasize that effective risk control, position sizing, stop losses, is not just a component, but the very foundation upon which a profitable trading career is built. 6. Trading psychology as the supporting structure. Recognize that mental discipline, emotional control, and a resilient mindset provide the necessary support for consistent execution and navigating the inevitable ups and downs of trading. 7. Strategic development and execution. Understand that a well-defined trading plan with clear entry and exit rules, based on a sound understanding of market mechanics, forms the next critical layer. 8. Advanced skills and adaptability at higher levels. Appreciate that skills like reading order flow, understanding multi-time frame context, and adapting to changing market conditions represent more advanced stages of trader development. 9. Self-mastery as the ultimate goal. Recognize that the pinnacle of the pyramid involves an intuitive understanding of the market and one's own psychology, leading to consistent peak performance and adaptability. 10. Holistic approach to trading success. Understand that the pyramid of success underscores the interconnectedness of all aspects of trader development, mindset, risk management, and strategy, and the importance of nurturing each element. Chapter 5. Why Traders Fail. In this sobering yet essential chapter, Mike Bellafiore draws upon his extensive experience coaching and observing numerous traders to dissect the common reasons behind trading failure. He moves beyond simplistic explanations and delves into the often intertwined psychological, strategic, and risk management errors that plague aspiring traders. Bellafiore emphasizes that while the allure of quick profits can be strong, A lack of understanding and discipline in addressing these fundamental flaws almost guarantees disappointment. He likely elaborates on the detrimental impact of various psychological biases, such as the fear of missing out, FOMO, leading to impulsive entries, loss aversion causing traders to hold on to losing positions for too long, and overconfidence after a few wins, leading to reckless risk-taking. The chapter probably also addresses strategic shortcomings, including the lack of a well-defined trading plan, inconsistent application of rules, and a failure to adapt to changing market conditions. Furthermore, Bellafiore undoubtedly highlights the critical role of poor risk management, such as improper position sizing, failing to use stop-loss orders consistently, and the emotional urge to revenge trade after losses. By candidly outlining these common pitfalls, Bellafiore aims to provide a valuable roadmap of what not to do. He underscores the importance of self-awareness in recognizing these tendencies and proactively working to mitigate their negative impact. This chapter serves as a crucial wake-up call for aspiring traders, emphasizing that avoiding these well-trodden paths of failure is a significant step towards achieving consistent profitability. Key takeaways. 1. The dominance of psychological barriers. Understand that emotional and cognitive biases often play a far more significant role in trading failure than a lack of technical knowledge. Recognizing and addressing these internal challenges is paramount. 2. The perils of poor risk management. Appreciate that inadequate risk control, including improper position sizing, ignoring stop losses, and risking too much capital, is a leading cause of account blow-up and trading failure. Protecting your capital is non-negotiable. 3. The necessity of a well-defined trading plan. Recognize that trading without a clear strategy, rules for entry and exit, and a defined approach is akin to navigating without a map. A lack of a plan leads to inconsistent and often emotional decision-making. 4. The destructive nature of emotional trading. Understand how letting emotions like fear, greed, hope, and revenge dictate your trading decisions inevitably leads to impulsive errors and deviations from your plan. 5. The failure to learn from mistakes. Appreciate that every trade, win or lose, offers a learning opportunity. The inability or unwillingness to analyze errors objectively and adapt your approach hinders growth and perpetuates failures. 6. The trap of seeking quick riches. Recognize that consistent profitability is a marathon, not a sprint. The pursuit of get-rich-quick schemes and unrealistic expectations often leads to poor decision-making and ultimately, failure. 7. Inconsistency and lack of discipline. Understand that even a good trading plan is useless without the discipline to follow it consistently. Inconsistent application of rules and deviating from your strategy are common reasons for failure. 8. Ignoring market dynamics and the need to adapt. Appreciate that the market is constantly evolving. A failure to recognize and adapt your strategies to changing market conditions will eventually lead to losses. 9. Lack of self-awareness. Recognize that understanding your own psychological tendencies, biases, and emotional triggers is the first step towards mitigating their negative impact on your trading. 10. Underestimating the difficulty and complexity of trading. Understand that consistently profitable trading is a challenging endeavor that requires significant time, effort, dedication, and a willingness to continuously learn and improve. Chapter 6. Live to play another day. In this crucial chapter, Mike Bellafiore hammers home the paramount importance of risk management, emphasizing that the primary goal of any trader, especially in the high-stakes world of proprietary trading, is capital preservation. He argues that, without protecting your trading funds, all potential for future profits vanishes. The chapter likely delves into practical strategies and a mindset centered around minimizing losses and ensuring longevity in the market. Bellafiore likely discusses the necessity of setting strict stop-loss orders on every trade, understanding and diligently managing position sizes relative to your account equity and risk tolerance, and being acutely aware of the dangers of excessive leverage. He probably emphasizes the importance of viewing trading as a long-term endeavor, where surviving inevitable losing streaks is just as critical as capturing winning trades. The chapter might also touch upon the psychological aspect of accepting losses as a cost of doing business and avoiding the emotional trap of revenge trading, which often leads to further capital erosion. Ultimately, Live to Play Another Day serves as a powerful reminder that consistent profitability is built on a foundation of prudent risk management, ensuring that you always have capital available to capitalize on future opportunities. Key takeaways. 1. Capital preservation is the ultimate goal. Understand that protecting your trading capital is the absolute top priority. Without capital, you cannot participate in future trading opportunities. 2. The necessity of stop-loss orders. Recognize that implementing and strictly adhering to stop-loss orders on every single trade is non-negotiable for limiting potential losses and preventing catastrophic account damage. 3. Strategic position sizing. Appreciate the importance of carefully calculating your position size based on your account equity, risk tolerance, and the volatility of the instrument you are trading. Avoid risking too much on any single trade. 4. The dangers of excessive leverage. Understand the double-edged sword of leverage, which can magnify both profits and losses. Use it judiciously and with a clear understanding of the potential downside. 5. Trading as a long-term game. Adopt a long-term perspective, recognizing that successful trading is a marathon, not a sprint. Surviving losing periods is crucial for long-term profitability. 6. Accepting losses as a cost of doing business. Understand that losses are an inevitable part of trading. Learn to accept them without emotional distress and focus on the overall profitability of your system over time. 7. Avoiding revenge trading. Recognize the destructive urge to try and recoup losses immediately after a losing trade. Resist this impulse, as it often leads to further impulsive and poorly thought-out decisions. 8. Developing a risk management plan. Formalize your rules for stop losses, position sizing, and overall risk exposure in a written trading plan and adhere to it consistently. 9. Focus on probabilities, not individual trades. Understand that your edge plays out over a series of trades. Protecting your capital allows you to participate in enough trades for your edge to become apparent. 10. Live to Play Another Day. As a core trading philosophy, internalize this mantra. Every trading decision should be made with the primary consideration of ensuring you have capital to trade tomorrow. Part 3. Getting Technical. Chapter 7. Stocks in Play. In this chapter, Mike Bellafiore introduces a core concept for intraday traders at SMB Capital, focusing their attention and capital on stocks in play. These are securities that are experiencing significant news, events, or catalysts that are highly likely to generate substantial intraday volatility and trading opportunities. Bellafiore emphasizes that by concentrating on these dynamic stocks, traders can potentially find larger and faster price movements compared to more stagnant securities. He likely elaborates on how to identify these stocks in play in the pre-market and throughout the trading day. This involves utilizing news scanners to track earnings releases, economic data announcements, analyst upgrades or downgrades, and other market-moving events. Understanding the potential impact and duration of these catalysts is crucial. The chapter might also discuss the characteristics that make a stock particularly attractive when it's in play, such as high pre-market volume, significant price gaps, and strong relative strength or weakness compared to the broader market. Bellafiore likely underscores the importance of being prepared to act quickly and decisively when these opportunities arise, but also with a clear trading plan and disciplined risk management. Trading stocks in play can be highly profitable, but also carries increased risk due to the heightened volatility. Key takeaways. 1. Focus on high-impact opportunities. Understand the advantage of concentrating your trading efforts on stocks experiencing significant catalysts that are likely to drive substantial intraday price action. 2. The importance of pre-market research. Recognize the crucial role of diligent pre-market analysis using news sources, earnings calendars, and market scanners to identify potential stocks in play before the trading day begins. 3. Identifying market-moving catalysts. Learn to recognize the types of news and events, e.g., earnings, economic data, analyst ratings that typically have the power to significantly influence a stock's price. 4. Key characteristics of stocks in play. Understand the signs that indicate a stock is likely to be active, such as high pre-market volume, significant price gaps, up or down, and strong relative strength or weakness. 5. The potential for increased volatility and reward. Appreciate that stocks in play offer the potential for larger and faster profits due to increased volatility, but also come with higher risk. 6. The need for speed and decisiveness. Recognize that capitalizing on stocks in play often requires the ability to react quickly and execute your trading plan decisively when opportunities arise. 7. Maintaining a clear trading plan. Emphasize the importance of having well-defined entry and exit criteria and sticking to your trading plan even amidst the excitement and rapid price movements of stocks in play. 8. Disciplined risk management is crucial. Understand that the increased volatility of stocks in play necessitates even more stringent risk management practices, including setting tight stop-loss orders. 9. Staying informed. Throughout the day, recognize the need to continuously monitor news and market developments during the trading session to react to new information that might impact your stocks in play. 10. Not every catalyst creates a trading opportunity. Learn to discern between news that will likely lead to significant price action and noise that is best avoided. Chapter 8. Reading the Tape. In this chapter, Mike Bellafiore delves into the often debated and sometimes misunderstood art and science of reading the tape. This refers to the skill of interpreting real-time order flow data to gain insights into the immediate supply and demand dynamics of a stock. It involves analyzing the level 2, market depth, which displays the various bid and ask prices and the sizes of the orders at those levels, as well as the time and sales window, which shows the details of each executed trade, price, size, and time. And Bellafiore likely explains how skilled tape readers look for imbalances between buyers and sellers, identify potential areas of support and resistance based on the size of the orders, and try to anticipate short-term price movements based on the speed and aggressiveness of the order flow. He might discuss how to spot large institutional buyers or sellers entering or exiting positions, and how to differentiate between genuine buying, selling pressure, and potential manipulation, or spoofing, of orders. The chapter likely emphasizes that becoming proficient at reading the tape is a dynamic skill that requires significant screen time, focus, and the ability to develop an intuition for the subtle nuances of order flow. While some argue about its relevance in today's algorithmic trading environment, Bellafiore likely presents it as a valuable tool in a trader's arsenal for gaining a micro-level edge in the market. Key takeaways. 1. Understanding real-time order flow. Recognize that reading the tape involves analyzing the continuous stream of buy and sell orders and executed trades to understand the immediate supply and demand situation. 2. Interpreting level 2, market depth. Learn how to analyze the bid and ask prices and the corresponding order sizes to identify potential areas of buying or selling interest and potential price levels of support or resistance. 3. Analyzing time and sales data. Understand how to interpret the sequence of executed trades, paying attention to the price, size, and timing of transactions to gauge the urgency and conviction of buyers and sellers. 4. Identifying imbalances in supply and demand. Learn to spot situations where there are significantly more buyers than sellers at a particular price level, or vice versa, which can suggest potential short-term price movement. 5. Detecting large buyers or sellers. Understand how to look for unusually large orders on the level 2 or in the time and sales window, which might indicate institutional activity. 6. Differentiating genuine pressure from manipulation. Recognize that not all order flow is genuine. Learn to be aware of potential spoofing or other manipulative tactics and focus on sustained and aggressive order flow. 7. Developing intuition. Through practice. Appreciate that becoming proficient at reading the tape requires significant screen time, focused observation, and the development of an almost subconscious understanding of order flow dynamics. 8. Integrating tape reading with other technical tools. Understand that reading the tape is often most effective when used in conjunction with other forms of technical analysis, such as chart patterns and market profile. 9. The relevance in today's algorithmic environment. Consider the impact of algorithmic trading on order flow and how tape reading might still provide valuable insights, particularly at key price levels. 10. Focus on context. Recognize that the interpretation of order flow is highly context-dependent and should be analyzed within the broader market environment and the specific stock's behavior. Chapter 9. Maximizing your profits with scoring. In this chapter, Mike Bellafiore introduces the concept of scoring trading setups as a way to objectively assess their potential for success and profitability. He argues that not all trading opportunities are created equal, and by developing a systematic scoring system, traders can learn to identify and focus on the highest probability, highest reward setups. This involves assigning points or weights to various factors that align with a trader's specific strategy and edge. Bellafiore likely outlined several categories of criteria that might be included in a scoring system. These could include the strength and clarity of the technical setup, e.g., chart patterns, key level breakouts, the presence and significance of a catalyst, e.g., news, earnings, the order flow dynamics as observed through tape reading, the overall market context, e.g., broad market trend, sector strength, and the risk-reward profile of the trade. By assigning scores to each of these factors, traders can arrive at a composite score for a particular setup. This score then helps them prioritize which trades to take, determine appropriate position sizes, and potentially manage their winning trades more effectively to maximize profits. The chapter emphasizes that a well-designed scoring system should be tailored to an individual trader's methodology and should evolve over time based on their trading results and market observations. It's a way to bring more objectivity and discipline to the trade selection process. Key takeaways. 1. Objectivity in trade selection. Understand that a scoring system introduces a level of objectivity to the often subjective process of choosing which trades to take, helping to reduce emotional impulses. 2. Prioritizing high probability setups. Recognize that by evaluating setups based on a predefined set of criteria, you can focus your time and capital on the opportunities with the highest likelihood of success. 3. Identifying confluence factors. Learn to incorporate multiple supporting factors: technical, fundamental, order flow, market context, into your scoring system to increase the robustness of your trading decisions. 4. Tailoring the system to your edge. Understand that your scoring criteria should be specifically aligned with your individual trading strategy, the types of setups you excel at, and the market conditions where you have an edge. 5. Quantifying potential reward. Consider incorporating factors into your scoring system that help you assess the potential profit target and the likelihood of reaching it. 6. Integrating risk-reward assessment. Understand that the scoring process should also take into account the potential downside risk relative to the potential reward, helping you to prioritize trades with favorable risk-reward ratios. 7. Dynamic system evolution. Recognize that your scoring system should not be static. It should be regularly reviewed and adjusted based on your trading performance and changes in market dynamics. 8. Using scoring for position sizing. Understand how the score of a particular setup might influence the size of your position, allowing you to be more aggressive on higher probability trades. 9. Improving trade management. Consider using your scoring system to help guide your decisions on when to take profits, adjust stops, or add to winning positions. 10. Discipline in application. emphasize the importance of consistently applying your scoring system to every potential trade and avoiding the temptation to deviate based on gut feelings or FOMO. Part 4. The Trader's Brain. Chapter 10. Trader Education. In this chapter, Mike Bellafiore emphasizes that becoming a consistently profitable trader is not a destination reached after a course or a few successful trades, but rather an ongoing and relentless educational journey. He highlights the culture at SMB Capital, where continuous learning and skill development are deeply ingrained. Bellafiore likely discusses the various methods employed at the firm for trader education, including formal training sessions, mentorship programs where experienced traders guide newer ones, and the crucial practice of video review, watching recordings of one's own trading sessions to identify patterns of both success and failure. The chapter probably underscores the importance of self-assessment, encouraging traders to honestly evaluate their strengths and weaknesses, and to actively seek out resources and strategies for improvement. This might include studying market history, analyzing different trading methodologies, and staying abreast of current market news and developments. Bellafiore likely stresses that the most successful traders are those who maintain a student's mindset, constantly seeking knowledge and striving to refine their craft. Trader education, in this context, is not a one-time event, but a continuous process of learning, applying, and adapting in the ever-evolving market environment. Key takeaways. 1. Continuous learning is a non-negotiable. Understand that the market is dynamic, and successful traders must commit to lifelong learning and skill development to stay ahead. 2. The value of mentorship. Recognize the significant impact of learning from experienced and successful traders who can provide guidance, share insights, and offer valuable feedback. 3. The power of self-review and analysis. Appreciate the importance of regularly evaluating your own trading performance through tools like video review and trading journals to identify patterns and areas for improvement. 4. Utilizing diverse educational resources. Understand the benefits of leveraging various learning resources, including books, courses, webinars, and market data analysis tools to expand your knowledge base. 5. Active seeking of improvement. Emphasize the importance of proactively identifying your weaknesses and actively seeking out strategies and techniques to address them. 6. Maintaining a student's mindset. Cultivate a mindset of humility and continuous curiosity, always being open to learning new things and refining your approach. 7. Learning from both wins and losses. Recognize that both successful and unsuccessful trades offer valuable learning opportunities if analyzed objectively. 8. Staying updated with market dynamics. Understand the importance of staying informed about current market news, economic events, and changes in market structure that can impact trading strategies. 9. The long-term investment in yourself. View trader education as an ongoing investment in your own skills and potential for long-term success in the markets. 10. Sharing knowledge and collaboration. Appreciate the benefits of engaging with other traders and sharing knowledge to foster a collaborative learning environment. Chapter 11. The Best Teacher. In this chapter, Mike Bellafiore posits that while mentors, educational resources, and trading tools are undoubtedly valuable, the most profound and impactful lessons for a trader come directly from the market itself. He emphasizes that real-world trading experience, with its inherent volatility, unpredictability, and constant feedback loop of wins and losses, provides the most authentic and lasting education. Bellafiore likely discusses the importance of paying close attention to how the market behaves in different situations, understanding the nuances of price action and volume, and learning to recognize patterns and anomalies that aren't always explicitly taught. He underscores the idea that the market is a relentless and unbiased teacher, constantly providing feedback on the validity of your strategies and the effectiveness of your execution. By actively observing and analyzing market behavior, traders can develop an intuitive understanding that goes beyond theoretical knowledge. The chapter likely encourages traders to be humble students of the market, constantly seeking to understand its language and adapt their approach based on its direct lessons. Ultimately, Bellafiore suggests that the best teacher demands active participation, keen observation, and a willingness to learn from every tick, every trade, and every market cycle. Expanded key takeaways. Direct market experience is unrivaled. Understand that no book, course, or mentor can fully replicate the valuable lessons learned from actively trading in live market conditions. 2. Paying attention to market feedback. Recognize the importance of closely observing price action, volume, and order flow to understand how the market is reacting to various events and levels. 3. Learning from both successes and failures. Appreciate that both winning and losing trades provide crucial feedback about what you did well and what needs improvement. Analyze both objectively. 4. Developing intuition. Through observation. Understand that consistent exposure to the market and a focused effort to understand its behavior can lead to a more intuitive grasp of its dynamics. 5. The market as an unbiased instructor. Recognize that the market doesn't care about your opinions or predictions. It simply reacts based on the collective actions of all participants, offering objective lessons. 6. Humility in the face of the market. Understand the importance of approaching the market with humility, acknowledging that it is always right and that you must be willing to learn from it. 7. Adapting strategies based on market lessons. Recognize that your trading strategies should not be static, but should evolve based on the ongoing feedback and lessons learned from the market. 8. The value of real-time learning. Appreciate the immediacy of the market's feedback, allowing for rapid adjustments to your approach based on what is currently working or not working. 9. Beyond theoretical knowledge. Understand that while theory provides a foundation, true mastery comes from applying that knowledge in the real world and learning from the consequences. 10. Becoming a keen observer. Cultivate the skill of being a highly attentive observer of market behavior, constantly seeking to understand the underlying forces driving price action. Chapter 12. Adapt to the markets. In this chapter, Mike Bellafiore emphasizes the critical importance of flexibility and adaptability for traders to thrive in the ever-evolving market environment. He argues that the market is a dynamic entity, constantly changing its behavior, volatility, and dominant trading styles. Traders who become rigid in their approach and cling to strategies that worked in the past risk being left behind and ultimately failing. Bellafiore likely discusses the need for traders to continuously observe and analyze market conditions, identify shifts in trends, volatility, and volume, and be willing to adjust their trading plans and techniques accordingly. This might involve learning new strategies, modifying existing ones, or even temporarily stepping aside if their current edge is no longer present. The chapter probably underscores that successful traders are not married to any single approach, but are instead pragmatic and willing to evolve with the market. This requires a mindset of continuous learning, a willingness to experiment, and the ability to let go of outdated beliefs or strategies. Adapting to the market is not just about changing tactics. It's about cultivating a flexible and open-minded approach to trading itself. Key takeaways. Market dynamics are constantly changing. Understand that the market is not static and that its behavior, volatility, and dominant patterns are always in flux. 2. Flexibility is essential for longevity. Recognize that the ability to adapt your trading strategies and techniques to current market conditions is crucial for sustained success over the long term. 3. Avoiding rigidity and dogmatism. Understand the dangers of becoming too attached to a particular trading style or belief, and the importance of being open to new approaches. 4. Continuous observation and analysis of market conditions. Emphasize the need to constantly monitor market behavior, identify shifts in trends, volatility, and volume, and understand the underlying drivers of these changes. 5. Willingness to modify or abandon strategies. Recognize that strategies that were once profitable may become less effective as market dynamics shift. Be prepared to adjust or even abandon them when necessary. 6. embracing continuous learning and experimentation. Understand the importance of staying curious, learning new techniques, and being willing to test and incorporate new approaches into your trading. 7. Letting go of ego and past successes. Recognize that past success does not guarantee future profitability if you are unwilling to adapt to new market realities. Be humble and willing to evolve. 8. Developing a diverse trading skill set. Consider the benefits of having a range of trading strategies and being able to deploy the most appropriate one based on current market conditions. 9. Knowing when to step aside. Understand that there will be times when your edge is not present in the current market environment. Having the discipline to reduce trading activity or even step aside is a sign of a mature trader. 10. Adaptability as a core trader trait. Recognize that the ability to adapt is not just a skill, but a fundamental characteristic of consistently successful traders. Chapter 13. The Successful Trader. In this final chapter, Mike Bellafiore likely brings together the various threads discussed throughout One Good Trade, offering a holistic view of the characteristics, skills, and mindset that contribute to consistent success in the challenging world of professional trading. He probably reiterates the importance of a strong work ethic, unwavering discipline in executing a well-defined trading plan, a relentless commitment to continuous learning and self-improvement, and the absolute necessity of effective risk management for long-term survival. Bellafiore likely emphasizes the crucial role of a resilient and adaptable psychological approach, highlighting the need for emotional control, the ability to learn from mistakes, and the mental toughness to persevere through inevitable losing streaks. He might also touch upon the significance of passion for the craft and the dedication required to navigate the demanding and often unpredictable nature of the markets. Ultimately, the chapter likely serves as a powerful reminder that consistent profitability in trading is not solely about finding the perfect strategy, but rather about the holistic integration of sound principles, disciplined execution, and a winning mindset. It's about the journey of continuous development and the unwavering pursuit of making one good trade at a time. Key takeaways. 1. The holistic nature of trading success. Understand that consistent profitability requires a comprehensive approach encompassing technical skills, robust risk management, and a strong psychological foundation. No single element is sufficient on its own. 2. Unwavering discipline in execution. Recognize that having a sound trading plan is only effective if you possess the discipline to follow it consistently, even when faced with emotional pressures or market volatility. 3. Relentless commitment to continuous learning. Emphasize the ongoing need for traders to learn, adapt, and refine their skills and knowledge in the ever-evolving market environment. Complacency is the enemy of progress. 4. The foundational importance of risk management. Reiterate that protecting your trading capital through proper position sizing, stop-loss orders, and a responsible approach to leverage is paramount for long-term survival and success. 5. A resilient and adaptable psychological approach. Understand the crucial role of emotional control, mental toughness, and the ability to learn from mistakes in navigating the inevitable ups and downs of trading. 6. The power of focus on the process. Remind yourself that consistent success stems from focusing on the process of making one good trade at a time, rather than solely fixating on the outcome of individual trades. 7. Passion and dedication. As driving forces, recognize that the demanding nature of trading requires genuine passion for the craft and a strong dedication to putting in the necessary time and effort. 8. Self-awareness and self-mastery. Understand the importance of knowing your own psychological tendencies and working towards mastering your emotions and biases to improve decision-making. 9. The long-term perspective. Embrace the understanding that becoming a consistently profitable trader is a marathon, not a sprint, requiring patience, perseverance, and a long-term commitment to growth. 10. The synthesis of one good trade. Recognize that the philosophy of focusing on making one good trade at a time, combined with the right tools, mindset, and continuous development is the cornerstone of sustainable trading success. All right, PowerBooks community, that wraps up our breakdown of one good trade for today. I hope you've gained some powerful insights into the mindset and discipline required to navigate the exciting world of trading. If you found these key takeaways valuable and want to dive even deeper into the strategies and the intense world inside a prop trading firm, make sure to let me know in the comments below. If there's enough interest, I'll drop a link to the full book in the description so you can explore every chapter in detail. And if you enjoyed this Power Pack summary, please hit that like button. It helps us reach more individuals on their journey to success. Don't forget to share this video with anyone you know who's looking to level up their trading game or gain a competitive edge. Of course, to stay plugged into more powerful book breakdowns on self-development, business, investing, and the crucial psychology of wealth building, make sure you subscribe to PowerBooks and hit that notification bell so you never miss an upload. Your engagement and feedback mean the world, so keep those comments coming. Let me know what other powerful books you'd like us to explore next. Thanks for tuning in to PowerBooks. Now go out there and focus on making your next trade a good one. We'll catch you in the next video. Stay powerful.